So students, we will solve the sixth problem today. It's come for 2012 and 2018. Following are the summarized balance sheet of A company as on 2011 and 2012. Share capital. There is an increase in share capital to the extent of 10,000. It is called issue of share. So it will come in finance activity. However, there is an adjustment related to this issue of share. When we come to adjustment, we will look into. But for the time being, the share capital have increased by 10,000 finance activity. There is a transfer to GR 2000 will come in operating activity. Net profit last year 6,000, current year 6,000, then net profit will be nil. 6,000 minus 6,000 will be nil. Long-term loan, there is a decrease, completely it is paid. Last year 14,000, current year dash. Indicates that the long-term loan 14,000 is completely paid, finance activity. Creditor is a current liability, operating activity. There is a decrease in 3,000, so you should minus. Provision for tax, you need to prepare an account because we have an adjustment relating to it. Land and building, there is a decrease in land and building to the extent of 2,000. So we treat that as depreciation to the extent of 2,000. Operating activity add. Machinery, you need to prepare an account because there is an adjustment relating to machinery. Debtor is a current asset, so it will come in operating activity. There is a decrease in debtor to the extent of 3,200, which indicates that received from debtor you should add. Opening cash 3,000, closing cash 1,600 will come in CFS statement. Stock is a current asset, 17,000 last year, current year 14,800, which indicates 2,200 stock is sold. Operating activity add. Goodwill last year we don't have, current year we have 1,000, which indicates that goodwill is purchased. Let us have a detailed discussion in the adjustment. Additional information, dividend 4,600 was paid. OA minus OA add FA minus. Operating activity you should add and finance activity you should minus. Assets of another company purchased were machinery 5,000, stock 4,000, goodwill 1,000 by issuing of equity shares. So increase in share capital which we found in the balance sheet was 10,000. So that means shares are issued 10,000 for purchase of asset. 3 assets were purchased: machinery 5,000, stock 4,000, goodwill 1,000. So 5 plus 4 plus 1 you get 10,000. So 10,000 assets are purchased and 10,000 shares are issued. So this is not an adjustment, it's an information because already this transaction is found in the balance sheet. So how much will come in issue of share in finance activity is only 4,000. As we discussed in fund flow statement, current and non-current only will come in calculation. So share is non-current, stock is a current. So in finance activity you should take only only stock 4,000. Machinery was further purchased for cash 1,600 will come in machinery account and investing activity. Depreciation written off machinery 2,400 will come in machinery account and OA. Income tax provided during the year. It's not paid during the year, it's provided during the year. So you provide out of profits to be paid in future. So it will come in provision for tax account and OA. Loss on sale of machinery 400 was written off. So machinery sold. For how much it is sold, we don't know. So we need to find it out. So machinery, loss on sale of machinery 400 was written off. It means it will come in OA and finance activity. Prepare cash flow statement as per indirect method AS3. So machinery account students. So to balance brought down, that's opening balance of machinery 30,000. We have purchased machinery through issue of share given in adjustment number 2. Then again in adjustment number 3 we have purchase of machinery for cash 1,600, by depreciation 2,400, by loss 400, balance carried down 33,800. So machinery account tallies, there is no differencing figure in machinery account. Provision for tax is a liability, so by balance brought down 6,000. Then income tax provided during the year as per adjustment number 5, 7,000. Then closing balance 7,000. Therefore you get IT paid 6,000. So 6,000 IT paid will come in provision for tax account and FA finance activity. So it's called cash flow from operating activity, students. So net profit is nil because 6,000 minus 6,000 nil. GR transfer add 2,000, add depreciation on land and building, add decrease in data 3,200, add decrease in stock 2,200, add dividends paid 4,600, add depreciation on machinery 2,400, add loss on sale of machinery 400, add provision for tax 7,000. So we get 23,800 total add item, less creditors decrease 3,000. So you get plus 20,800, which indicates cash flow from operating activity. Next, cash flow from investing activity. We don't have any purchase, we don't have any sale of asset, less purchase of plant and machinery. So you get minus 1,600. Cash flow from finance activity. Issue of shares to the extent of stock only, because share is a non-current, stock is a current, so we should take only stock 4,000, less long-term loan paid 14,000, less dividend paid 4,600, less income tax paid 600. So we get outer column 20,600 minus, which indicates cash outflow from finance activity. So we get final cash flow statement. Cash flow from operating activity plus 2,800, cash flow from investing activity minus 1,600, cash flow from finance activity minus 20,600. So net cash flow is minus 1,400. Add opening cash balance 3,000. So we get resulting closing cash and bank.